Welcome back to Financial Market Insights for Traders. I'm Sophia, your guide through the exciting and ever changing landscape of financial markets. Today, we have a very insightful topic tailored specifically for traders looking to explore new opportunities, your guide to trading agricultural commodities online, step by step for beginners. This episode is packed with everything you need to confidently navigate the dynamic world of agricultural commodities trading. Agricultural commodities, including wheat, corn, soybeans, coffee, sugar, and cocoa, are fundamental pillars of global trade, affecting everything from your morning coffee to worldwide food security. Recently, agricultural markets have seen increased volatility due to geopolitical tensions, unpredictable weather patterns influenced by climate change, supply chain disruptions from conflicts such as the ongoing war in Ukraine, and fluctuating global demand post-pandemic. This volatility presents ample trading opportunities for informed traders. Let's start by clearly defining what agricultural commodities are. Essentially, they fall into two broad categories. First are soft commodities like coffee, cocoa, sugar, and cotton. These products are usually grown in tropical or subtropical climates and are particularly sensitive to seasonal weather variations and conditions like droughts, flooding, or unusual temperatures. The second category includes grains and oilseeds, vital crops like wheat, corn, soybeans, and rice, which are integral to global food supplies and directly influence food prices and security worldwide. Prices for these commodities are highly sensitive to several factors. For example, recent drought conditions in key producing regions such as Brazil and Argentina significantly impacted soybean and coffee yields, driving up prices. Similarly, geopolitical events, notably the Russia-Ukraine conflict, have severely disrupted wheat supplies, leading to spikes in global grain prices. Additionally, economic shifts, such as inflationary pressures seen globally over the past year, also significantly impact commodity markets. Understanding these dynamics is fundamental to successful trading. Step 2 involves selecting the right trading platform. The importance of a reliable platform can't be overstated, as it directly impacts your trading efficiency and security. One highly recommended platform is Crystal Ball Markets, known for its user-friendly interface, competitive spreads, and robust tools for both technical and fundamental analysis. When choosing your platform, ensure it offers transparency, strong regulatory compliance, secure payment options, and responsive customer support. Once you've identified a suitable trading platform, step 3 is opening your trading account. This straightforward process involves registering your details, verifying your identity through standard KYC procedures, which typically require government-issued identification documents, and funding your account through available methods such as bank transfers, credit cards, or digital wallets. Moving on to step 4, mastering market analysis techniques. Two primary forms of analysis are essential here: fundamental and technical. Fundamental analysis for agricultural commodities involves closely following macroeconomic indicators, agricultural supply and demand reports, weather forecasts, and geopolitical developments. For instance, recent USDA reports detailing crop conditions and supply estimates have been instrumental in shaping soybean and corn markets. Technical analysis involves charting price movements to identify trends and potential turning points. Traders frequently use indicators such as moving averages, relative strength index, RSI, and moving average convergence divergence, MACD. An additional valuable resource is the Commitments of Traders COT report, published weekly, detailing the positions of commercial hedgers and speculators, helping traders gauge market sentiment effectively. Step 5 emphasizes creating a solid trading strategy. Popular agricultural commodity trading strategies include trend following, capitalizing on sustained upward or downward price movements; range trading, profiting within specific price boundaries during periods of low volatility; breakout trading, entering trades when commodity prices move significantly beyond established support or resistance levels; news-based trading, taking positions based on significant news events, such as extreme weather forecasts or major geopolitical developments. Whichever strategy you choose, integrating robust risk management, such as setting stop loss and take profit levels, remains critical to preserving your trading capital. before risking real money. Step 6 recommends practicing with a demo account. Crystal Ball Markets and similar platforms offer comprehensive demo accounts, allowing you to experiment with virtual funds. This practice helps you test strategies, better understand market behavior, and experience the impact of leverage without actual financial risk. Once you're comfortable and confident, Step 7 transitions to real money trading. At this stage, select your commodity, choose your contract type. Most traders prefer CFDs due to their flexibility and the absence of physical commodity ownership, and determine your position size according to your risk appetite. Always set stop loss and take profit orders to carefully manage your risk exposure. Effective risk management, detailed in Step 8, is paramount to your long-term success. Vital risk mitigation techniques include using stop loss orders to limit potential losses on each trade, diversifying trades across multiple commodities to avoid concentration risk, avoiding excessive leverage to prevent amplified losses, regularly staying informed about relevant market news to anticipate and react to price movements proactively, following strict position sizing rules, never risking more than a small percentage, typically 1 to 2%, of your trading capital on a single trade. Step 9 focuses on continuous learning and adaptation, critical due to the constantly evolving nature of commodity markets. Keeping updated through reputable market reports, engaging with expert analysis, participating in trader forums, and continually refining your approach based on experiences and feedback will dramatically improve your trading performance. Maintaining a detailed trading journal is particularly valuable, helping you analyze previous trades, identify errors, and track improvement over time. In conclusion, trading agricultural commodities online presents considerable opportunities to profit from global market fluctuations. By thoroughly understanding commodity markets, choosing a reputable trading platform like crystalballmarkets.com, employing disciplined strategies, and practicing sound risk management, both beginners and seasoned traders can successfully navigate this exciting financial arena. That wraps up today's comprehensive guide on trading agricultural commodities online. Thanks for tuning in to Financial Market Insights for Traders. I'm Sophia. Remember to stay informed, trade smart, and never stop learning. Until our next episode, happy trading.